Welcome, everyone. Welcome to the Main Street Alliance Getting Up to Speed session on retirement security. As you're coming into the space, you'll notice this was a webinar space, but we would love to welcome you and know that you're in the room. So if you can share a little bit about your name and the state that you're joining in from today, that'd be great. And we'll get started in just a bit. Welcome, Tasha from Chicago. Illinois, your state. I'm assuming that is Chicago. Welcome, Mel. Yes, great. Glad to have you here. And if you're just joining in, you're just putting your name and your state and your location in the chat box. Welcome, Sam from Vermont. Hi, Cheryl from Virginia. Hi, Melissa from Wisconsin. Okay, I could do this the whole entire time, but I'm sure that you guys didn't join this time in the middle of the day to listen to me to shout out everyone, but I'm just so grateful that you're taking the time out today to talk about something that's really important to us at Main Street Alliance. As a part of our care economy is talking and thinking about securing retirement security for small business owners and for the greater good of our country. We are at a hard time, to say that our heart feels a little bit understated. There's lots of things that are happening that is preventing us from having the quality of lives, but every day our small business owners are going into work and providing high road jobs for all of our employees and members. Today, I'm really excited to have some sage wisdom on the panel today to think with us. So what you want to do is go ahead and get your notepad out because there's going to be some nuggets dropped. And when we're faced with hard things, we start to organize, and that's what we're going to do today. So I'm delighted to have Honorable Kathleen Kennedy Townsend from the Department of Labor, Patrice Willoughby from NAACP will be our focus and our kind of deep dive. But in the effort and the modeling of Main Street, we talk about our stories from small business owners' perspective. So happy to have Jim Hauser, a longtime MSA member and founder, and Jessica from Vermont, who's going through organizing for retirement security. So I'm going to turn it over to our host today. And our host is Didier Tran. He's our Director of Policy and Political Impact. Feel free to drop your questions and comments in the chat box, and let's get started. Didier.
Thanks so much, Shonda. Hi, everyone. Just want to echo Shonda's thanks for taking time out of your busy schedules to join us today for this important topic. I did want to kick off with a quick highlight from Small Business Month last May, which was only a few weeks ago. We successfully executed 21 meetings with elected officials at the federal level, members of Congress in both the House and Senate, including a fly-in day for members from our Wisconsin delegation to go to Capitol Hill directly and speak with representatives and senators about our 5 core issue areas. So wanted to give a shout out to all of you who either participated directly in Small Business Month, our first national action in some time, and was just really, really heartwarming to be able to meet members in person after 2.5 years of the pandemic, and to be able to return to the kind of advocacy that we're accustomed to at Main Street Alliance. So really appreciate your support over the past few months as we geared up for Small Business Month. As Shonda said, today's focus will be on retirement security, which is the 3rd leg of our 3-legged stool in our work on the care infrastructure and care economy. You all are already incredible advocates around paid family and medical leave, as well as childcare issues that we continue to push Congress to come to a resolution on, hopefully as part of a budget reconciliation bill this year. But today we wanted to dive into that third pillar on retirement, where we've had some success in the past at the state level. And so I'd love to kick it off with Jim Hauser, who's co-chair of our Oregon team, as well as a longtime member of our board. And Jim will share his success story at the state level in Oregon that we hope to replicate across other states in the country. Jim?
Thank you, Didier. Yes, my name is Jim Hauser. Until we sold to a longtime employee and retired in January 2020, my wife, Liz Dally, and I founded, owned, and operated Hawthorne Auto Clinic in Portland, Oregon. And I also serve on the board of directors of the Main Street Alliance. To the important principle raised by our meeting today, for all of our 37 years in business, Hawthorne Auto Clinic provided important benefits to our employees, including a retirement savings plan with an employer match. Recruiting and retaining the best employees for the job in a competitive field like servicing and repairing modern high-tech automobiles requires paying attention to what the larger companies can offer, like retirement plans. Many small businesses cannot afford all the benefits that employees require. To level the playing field for small business and for many other reasons, in November 2013, Oregon's Governor John Kitzhaber created a retirement savings task force to address the retirement savings crisis and provide the Oregon legislature with recommendations for legislation to address this problem. And I was appointed to that task force. In September 2014, our task force had arrived at the following recommendations. Voluntary participation with auto enroll. Employees should be automatically enrolled with the right to opt out. Auto escalation of contribution levels with employee control. Contributions from payroll deductions, tax benefits, no required employer contributions, voluntary employer contributions accepted, reports to savers, portability, pooled and professionally managed, and self-sustaining. Today, over 100,000 Oregon employees are saving for their retirement to build better futures for themselves and their families. So far, Oregon workers have set aside more than $1 million using Oregon Saves, created and administered by the state of Oregon, where an employer does not offer a savings plan at work. In addition to private sector workers, the program is open to gig workers, contractors, the self-employed, sole proprietors, and most recently to personal support workers, home care workers, and personal care attendants. Participation continues to exceed projections, with 7 out of 10 workers electing to remain in the program as opposed to opting out, and with workers saving an average of $135 a month, a higher rate than initially anticipated. Oregon Saves is the first state-based retirement security program in the country. The word is that many other states and hopefully the federal government are considering following Oregon's success. Thank you. And now I would like to introduce Jessica Renzivia of Healing Arts Massage in Burlington, Vermont.
Thank you, Jim. Good afternoon. My name is Jessica Renzivia, owner of Healing Arts Massage in South Burlington, Vermont. I've been a Main Street Alliance member for 2 years now. I've been directly involved with the paid leave campaign. I'm grateful today to be here. I'm able to share my story, especially since it's evolved since starting this advocacy journey. I've been a licensed massage therapist for 9 years, and I decided after 7 years of working for spas and chiropractors clinics to open my own business in June of 2020. I was coming out of 11 weeks of no income, 11 weeks of quarantine mental stress, and 11 weeks of uncertainty. And to add to that, just a month before opening my doors, my husband was let go from a job we relied on to provide us with parental leave, medical insurance, and a retirement plan. Oh my God. Thankfully, my business took off and I was able to support my family and look ahead. During this transition, my husband also decided to pursue his dream of cooking Cuban food and sharing his culture with our community. He opened his business in April of 2021, and it quickly became very successful. His trajectory went further than we could have ever imagined, and he has, in just 1 year, partnered up and is opening a flagship restaurant location in downtown Burlington. My business has continued to get busier, and I was recently nominated as one of the best places to get a massage in Vermont. So here we are, 2 small business owners under one roof, so happy and grateful for this wonderful journey we're on, but always looking forward to the future. So one of the reasons I decided to get so involved in the paid leave campaign with MSA was because my husband and I had been preparing to start a family together. And then the pandemic came at a time that was so disruptive to so many people. It forced us to take a step back, focus on survival, put our plans on hold. And last year we finally took a leap, and I am now 26 weeks pregnant. And we will be welcoming our child in less than 3 months. So we are so excited and can't wait for this next part of our story. But unfortunately, as we all know, paid leave, as well as the rest of the care economy package that was outlined in the Build Back Better, is stalled in the Senate. So this has been frustrating for so many Americans that were energized and passionate about these key issues that were finally getting the attention they deserve. The pandemic should have been a wake-up call for policymakers about the urgent need to invest in our care infrastructure. Still, our decision to have a child was not going to change. We are doing what so many of us do. We figure it out, we try our best, and we keep moving forward. And forward is what's important when we start families. The future is the next focus for us. Having a child forces these conversations around retirement, wills, and what financial security we can provide for ourselves in our older years. So I come up from a lower income Latino community in the New York City metro area. Now, growing up, my grandparents, who immigrated from Puerto Rico and Cuba, came here, had successful businesses, and were able to retire at 65 with Social Security. That was enough. That is no longer the case. I experienced that shift within my own generation. I see it personally in both of my parents' current situations. My father retired after working for the city of New York for 35 years with a pension that gets him by, but he just turned 62 yesterday and isn't sure it's worth taking his Social Security now or waiting until he's 65. He is the caretaker for my 86-year-old grandmother who has lived for the last 15 years with PLS, which is a disease in the ALS family with a longer survival rate, but the same symptoms. My mother has 2 jobs, works 6 days a week. And when I mentioned taking Social Security at 62 next year, she laughed and brushed me off. There's no way that will pay my bills, she said. So this isn't just their reality, this is most of Americans' reality, especially the lower income and minority communities in this country where retirement conversations don't even take place. The disproportionate opportunities for people of color in this country are defined by the conversations that are not had. These are the people that grind and hustle their entire lives. There are service workers, our small business owners, our independent contractors, and so many others. How can they have a conversation with their children about retirement when they cannot retire themselves? So my husband, stepson, and I moved to Vermont 7 years ago. It provided us with better job opportunities and more affordable living. And while that is still true, given our successes, we still live in one of the oldest states population-wise. Many in that aging population have no plan at all. They can't afford it, it doesn't make sense, or they just don't have the information they need. So Jim gave a great example of how a state taking control of these programs and providing opportunity for their residents benefits everyone. Retirement and all of these critical care economy policy issues are the battles that need to take place in our state houses locally. We need to reach small business owners, service workers, the individuals in this country who fall through the cracks. We need to encourage them to speak up and ask for what they need. Empowering these voices and pushing for change is the way forward. Thank you.
Thank you so much, Jessica and Jim. I think we heard the full spectrum there of what is possible with a program like Oregon Saves, but at the same time, what is still sorely needed in states that don't have retirement programs. And first of all, I want to thank Jessica's father for his service, but I think that really underscores that even as a state employee, he doesn't feel financially secure as he enters his retirement years. So I want to also remind everyone, if you have questions, feel free to drop them in the Q&A function of the Zoom, and we'll field them later in the program. And so with that, I will now turn it over to Kathleen Kennedy Townsend, who joined the Department of Labor last fall as Labor Secretary Marty Walsh's representative on retirement and pension issues. In that role, she is helping to advance state and federal efforts to expand retirement savings programs. Kathleen most recently served as Executive Director of Retirement for All, a grassroots advocacy foundation to create universal retirement plans. From 2018 to 2019, she was Director of Retirement Security at the Economic Policy Institute, and she has served as a research professor at Georgetown University, where she founded the Center for Retirement Initiatives. Kathleen has also served as chair of the governor's Retirement Security Task Force for the state of Maryland that helped spearhead efforts to enact a state-run retirement plan for workers not covered by a retirement plan at work. And last but certainly not least, Kathleen was Maryland's first woman lieutenant governor from 1995 to 2003. So really delighted to have you join us today, Kathleen. And we're eager to hear about the Labor Department's work in this area.
Thank you. Well, I'm delighted and honored that you've asked me to join, and I'm thrilled that you put on this webinar. So thank you very much. And that we've heard from Jim and from Vermont about what the challenges are and what the advantages are. I have to tell you, a few years ago, I did testify in both Oregon and Vermont about the need for a retirement plan. So I'm glad that some have moved. And I have to tell you, Beth Pierce, from your treasurer from Vermont, just called me yesterday. She must have seen that we're having some Vermont issues right this very minute. So Secretary Walsh and Joe Biden very much believe that we need to, as Jessica, as you said earlier, strengthen Social Security, as well as have a good and robust system of savings for retirement. And I think Chandra knows that very well with the Main Street Alliance and all the work that you've done throughout the states. Just to put what your stories in sort of national perspective, half of all Americans are not prepared for retirement. Half have nothing saved for retirement at all. And it's not surprising because of that according to Gallup, who has polled this for the last 20 years, retirement is the #1 economic issue that Americans care about. That's above healthcare, and it's above maintaining economic security. It is so worrisome to many Americans that they're going to run out of money in retirement. In fact, a poll of 40-year-olds with children found that 82% of that group feared retirement more than death itself. That's how devastating the whole topic of retirement is. And I'm very impressed that the Main Street Alliance could bring together this group, because I was, Chandra's heard me say this a number of times, as has Patrice Willoughby from the NAACP, who's going to speak after me. When I was lieutenant governor and I had hearings on crime or domestic violence or healthcare or character education, I'd have 200 people show up. And when I chaired the task force on retirement security, only 20 people would show up because, and they were all recruited by AARP. And the reason for that, I think, is because the word retirement, because it does scare people, puts many into a fetal position, and they'd rather not think about it or hear anything about it, and therefore they don't even want to come and testify. So I congratulate you for getting this many people to come to this webinar and open themselves to what can we do and what the solutions are. One of my goals is to make sure that we understand that the fact that people could run out of retirement is not a private failing, but a systemic failing, that we haven't set up a system in which every workforce can offer a benefit, a retirement benefit, in which there's enough savings that can be acquired. And so I think that's very important that you've done this to lay out that this is not a personal problem, it is a systemic issue. What we set at the Department of Labor is 3 goals, and one is to increase the number of people who actually do have a retirement savings. And part of that comes from what the states have been able to do. When I started the center at Georgetown, no states have set up a program, and now with Oregon's lead, obviously in California, and Illinois' lead, 14 states have set up a program. And what we've learned from those states is that small businesses, which traditionally have not been able to set up retirement plans because they are so expensive and they're difficult to do. In fact, about 80% of businesses over 100 have retirement programs, whereas if you have a small business that is less than 28 employees, only 28% can set up a retirement plan. The idea of these state plans is it allows all these businesses to set up a plan for their employees, which means it helps businesses and it helps the employees start to save. As you heard from Oregon, the average amount of savings is over more than $1,000 a year, which is terrific. And it gives, what Pew Trust has found is that when people are able to save either an emergency saving or for their retirement, it gives them a sense of comfort, a sense of strength, and a belief that they can handle some of the tough things that life might throw at them. What we've also seen is that, and I'd love to hear if this is your experience as well, that it's not that expensive to set up a program under one of these state laws. It doesn't really take that much time. In fact, that's what Pew found when they did a study in Oregon. 80% of the small businesses said, we can do this. This is good. This is good for our employees and it's good for us. And when AARP went and asked the other 20%, what did you have to actually spend money on? They found it difficult to say. So some of us might think it was just ideological that they thought, of course, it would be difficult to set it up. So what we are trying to do at the Department of Labor is to highlight the value of states setting up these programs, the value perhaps of a federal legislation as well, which would make it easier for people across the country to have savings at work. The studies have shown, number one, people are much more likely to save if they save at work. Only 13% of Americans go out and find their own IRA by themselves. So most people like to do it where it's easy. And second of all, as Jim had mentioned, you have automatic enrollment. When Vanguard studied about the idea of automatic enrollment, 90% of people are apt to enroll in a retirement program if it is done automatically, whereas only 20% do it if they have to think about actually signing up. So there's a huge difference between making things easy for people and making it difficult. And I think our goal should be to make things easy. That's what we had in the defined benefit world. That's when we had pensions. It was easy to do. And I think that's really our responsibility, to make it easy again. I can, if you're interested, describe some of the hearings we're having around the country, but I will just mention that we've had our first one in New York and our second one will be in Hartford this Friday. Later on, I can give you more examples of where else we're going to have it around the country, but I'm sure we'd also like to hear from Patricia, who's done a terrific job at the NAACP.
Well, thank you, Kathleen. I really appreciate it. And to Shonda and all of the Main Street Alliance membership, thank you for inviting the NAACP here to contribute to this meaningful discussion. And the testimony of Jim and Jessica really illustrate the changing nature of retirement security. It's important in so many different ways. COVID and the changes in the demographics of the country have demonstrated that the economic of American families is not as strong as it should be. Kathleen has alluded to the availability of retirement plans, but in 2021, 68% of private industry workers had access to private retirement accounts. But the census has also estimated that of that 68%, only 41% actively contribute to their employer-sponsored retirement plan. We know also that with respect to the caregiving economy, women still constitute the majority of caregivers, although it's certainly not only women, but often women leave the workforce in midlife at the time when they are making the most money. But when they do that, they lose on average, and AARP and MetLife have quantified an average of $324,000, both in salary and Social Security. And so that sort of nexus between caregiving, the absence of retirement security, and the fact that in the government there has not been an overall good strategy for helping people save. They really contribute to the collective anxiety about retirement across all American families. The NAACP is 113 years old, and our focus in this area is really centered in racial equity, in that we are concerned, of course, about salary disparities, wage disparities, and also the inclusive economy, with people having outstanding levels of student debt, and also other barriers that don't allow the accumulation of generational wealth. And small business development and housing are two of the key indicators of generational wealth transfer. And so it's all very much connected in the ecosystem. If you're talking about emergency savings, retirement, wealth generation, creation, and sustainability of families, and then passing down that wealth to future generations to enable families to have economic stability. I came to this work in retirement security in the early 2000s. I'm in my 50s now. At the time, I went to law school when I was 30. And so I sort of restarted my career when I had some student loan debt, but I had older parents and they started to go into decline. And at the same time that they were going into decline, I was working on policy issues in Social Security and Medicare. And so while I was dealing with family issues on one side, really as a younger person with older parents, at the same time, I was paying off my own student loans and learning about what holes in the system actually exist and continue to exist. Back in the early 2000s, when I worked on Capitol Hill, when you'd say retirement security, people really went cross-eyed. They didn't know what you were talking about. And that has changed somewhat as people have become much more sensitive to the economic security issues faced by families. And so I have continued to do work in this area now at the NAACP, where in January of this year, we introduced the first letter ever on auto portability, and that is the proposition of employees being able to have their retirement savings accounts follow them from job to job. That is under consideration at the U.S. Department of Labor, and Honorable Townsend is working on it. Also, Senator Sherrod Brown and Senator Tim Scott are poised to introduce legislation advancing auto portability. And the NAACP will introduce for discussion at its July convention the first ever resolution on the support of auto portability as a tool for everyone, but specifically for Black communities and communities of color, because those small amounts that people are able to accumulate in their IRAs, 401ks, et cetera, when the employer-sponsored plan follows the employee, there's far less of an opportunity for that account to get cashed out, and for the employee then to not only get a penalty, a tax penalty, but also lose the benefit of compound interest and the security that having that retirement account will provide. There are other measures. We've heard some discussion about the state plans. The state plans, often states are at the forefront of innovation in forming those state plans that allow people to save. At the federal level, in March of this year, the House of Representatives passed Secure 2.0, which is a retirement savings bill. It's now under consideration in the Senate. And, among its provisions, it would allow employers to match student loan payments for their retirement contributions to those employees' retirement plans, which is really going to be a useful tool if it passes in the Senate. There are other measures that are currently available for small businesses and individuals, because again, retirement security is going to require a holistic approach from both the federal government and the states. But in current law and for small businesses, the retirement plan startup cost tax credit is currently operational, and that is can be found under Form 8881 on the irs.gov website. And that allows a tax credit of up to $5,000 for 3 years for the cost of starting a simple IRA or a 401k plan for employers who have 100 or fewer employees. Other tools that are available are also for workers, and particularly lower income workers. The Savers Credit, that is a fully refundable tax credit that allows a tax credit of either 50%, 20%, or 10% of the contributions an individual makes to a traditional or Roth IRA, or salary deferrals to a 401k or a 403b and some other retirement savings plans. That information can be found at Form 8880. It's called the Credit for Qualified Retirement Savings Contributions. And it begins at adjusted gross income levels of $20,500 for single people, up to $68,000 for married couples filing. And so it's called the Savers Credit. And so that's also a tool that's very useful for workers. And then additionally, within the care ecosystem, there is a tax credit for family caregivers. And family caregivers can currently claim a portion of up to $8,000 in caregiving costs for one person, or $16,000 for 2 or more individuals who are cared for by a family caregiver. And the information on that can be found in IRS publication 501, which is called the Dependents Standard Deduction and Filing Information publication. So there are measures that are currently in law. Sometimes people aren't aware of them. The irs.gov site as a federal site is the best place to get that type of information. Or if you have a tax advisor who advises the small business, your small businesses, that would also be a very good resource. But I think overall, we will continue to see changes in the workforce. Gig workers, there have been many people who have stood up sole proprietorships or LLCs during the pandemic. And as the work environment provides challenges to families, more people will start small businesses because they do allow both flexibility and also the accumulation of generational wealth. And I applaud the advocacy that you are doing in order to ensure a more holistic ecosystem for small businesses and individuals across the country. Thank you for having me today.
Thank you so much, Patrice. And if there's one thing I'm certain of today, it's that you are much faster than I am at unclicking the mute button. So I would be remiss if I didn't at least share some of your extensive bio and your knowledge on this issue. Patrice has over 20 years of experience in the House of Representatives, the executive branch, and the private sector, and has applied a racial equity lens to advocacy in financial services, tax, and technology. She has served as Chief of Staff and Counsel to the late Congresswoman Stephanie Tubbs Jones, guiding legislation to enhance retirement security and expand SBA lending programs. She has also served as Executive Director of the Congressional Black Caucus, supporting passage of the Recovery Act, the Dodd-Frank Financial Reform Act, and the Affordable Care Act. Upon leaving Capitol Hill, Patrice served in the Obama administration as well at the General Services Administration. So my apologies for not getting that in before you presented, Patrice, but wanted to make sure that everyone knew how steeped you are in this issue. And with that, I maybe want to just quickly turn to Jim, since Kathleen pointed to the Oregon Saves program and some of the myths around the cost burden to small business owners. Jim, can you speak a little bit to your experience there?
Well, excuse me, all I know directly is that, and I believe it was referenced, that some 80% that were polled said they saw no problem. So many employers now, even very small employers, have pretty good access to computerized systems for maintaining. They already have to send documentation, wages, and hours to the state, the federal government. That it's just one more click to enroll your employees, and to one more click for the payroll deduction, and it's administered through the Bureau of Labor and Industries, and their agency is called Oregon Saves. And the interesting thing, of the 20% of employers who were polled who did not like the plan, who thought it was cumbersome, when they were actually asked to give some examples of what the problem was, nobody had much to say. So, which did lead to the suspicion that there was more an ideological concern than any actual problems that they were encountering. It's been, I think it rolled out in 2016, 2017. And they've been adding, like recently they added, through the work of the SEIU, I believe, the union, they added the, workers in the care industry. Where's my notes on that? Are not typically the home care workers, personal care attendants, personal support workers. They were able even to devise a way to make that easy, to make enrolling those folks much easier. And that would be there, that there's more of a challenge, but the state of Oregon was able to do that.
Great, thanks so much, Jim. And I think it just bears repeating what Kathleen mentioned, is that we want to make this as easy as possible for small business owners to encourage participation. We do have a few questions in the Q&A, and encourage others to use the Q&A function to ask additional questions. The first question is for Kathleen. You mentioned how important it is for retirement plans to be easily accessible. Along with auto enrollment, what other factors like affordability contribute to a robust state-based retirement plan in your experience?
Oh, thank you. Whoever asked that question, I'm very grateful. As you heard, Patrice spoke eloquently about the need for portability. Just to give you one of the extraordinary statistics about portability, $98 billion is lost every year because people can't take their retirement plan from job to job. And over the course of a working life, it's been estimated by Boston College and others that a third of all savings is lost because of lack of portability. I can just testify from my own son-in-law when he tried to take $8,000 from one job retirement plan to a second job, it took him 15 hours to do it. And when I talk to people at the Department of Labor, all these 40-year-olds, that's a lot of political appointees are on 40, it sounds like. They all, each of them have had 3 or 4 jobs so far, and their retirement plans are sitting on their desk, not being consolidated, which means, just as Patricia so eloquently pointed out, it means they're not being consolidated. You're not getting the benefit of compound interest on a larger pot of money. It's easy to get lost. A number of people have already told me they can't remember what even the passwords are. So this is how the money gets lost, because people don't want to do it and don't want to have this problem. Now, I think that there are a number of things that can be done. I believe the Department of Labor can change some of its regulations and make it easier. You could mandate, number one, that the new employer has to take the money. They're not mandated to do that right now. You could mandate that it has to go from the back office to the back office, so that the individuals, the Patricia Willoughbys of the world, or the Jessicas of the world, or the Jims of the world don't actually have to take the check and bring it over, which solves a lot of problems if they don't have to do that themselves. As you can see, just as I want to make savings easier, I want to make it easy to take your retirement from job to job. My goal would be that it would become the default option and you wouldn't have to think about it. So that's my goal. I hope you join me in pushing it. I have to thank the leadership of the NAACP, because the truth is the issue of portability has not been high on reformers' minds for a period of time. And the fact that the NAACP is put it on the front burner, the fact that they're going to pass a resolution at their conference this summer, it shows just what a brave and courageous and perspicacious entity the NAACP is. Not that we ever doubted it was, but it just shows once again they're at the top of the game.
Thanks so much, Kathleen, and thanks as well to the NAACP for prioritizing portability in the coming months. Another question we have that could go to either of you is whether there have been any legal challenges to these state-based retirement plans, if you happen to know the answer to that.
I do. Yes, funnily enough, there have been. There was in California, the Howard Jarvis's group, the taxpayer group, challenged the California Saves on the grounds that it violated the preemption provisions of ERISA, which is the federal retirement legislation. The Ninth Circuit, that's the federal circuit court for California, said it did not. And then this spring, the Supreme Court did not take that case, which means that the Ninth Circuit ruling is now the rule of the law of the land. it's very possible that his group could challenge it in a different circuit, for instance, in Illinois or in Maryland. And the circuit court, the Fifth Circuit, might come up with a different view, and then it would have to go up to the Supreme Court. But at the moment, the state plans are safe. And my view is, could be wrong, of course, that the more the states help small businesses save money, their employees save money, the more difficult it becomes to say that this is preempted by ERISA, because what would you do with all that money? And that's, usually courts don't want to completely take away what has already been built.
And Kathleen is absolutely right. And at the root of that, over the past 20 years, like looking at this issue, I mean, these objections are often rooted in competition. And the fact is that for small savers, the small savers market and small businesses has been neglected far too long. And the states are places where this innovation is taking place. And so the more state plans there are, the broader the opportunity for people to save. And then, that is a societal good that we should all be supporting.
Can I just add on that what Patricia just said?
Sure.
When about 9 years ago, 10 years ago, it must be 10 years ago, when I chaired the task force in Maryland, many of the financial services, parts of the financial services industry did not like these state plans. That has been reversed in large part over the last 10 years for a couple of reasons. One, they were afraid of competition. What they've learned is the states have to go out to Wall Street and actually use State Street or Fidelity or other large firms to manage the money, number one. Number two, in a number of the states, the interest in 401k plans has skyrocketed because there are a number of businesses that don't want their money to be managed by the state government, the state IRA. They want it to be managed by a private manager. And so they're using the 401k system has boomed in those states that have these laws. And third, there's a belief that once an individual, the individual employee gets to a certain amount of money, maybe 1,000 isn't it, but it grows to $5,000, they will want to go into the private sector savings programs. So I think there is now a different view about what the state plans are doing in a way that didn't exist 10 years ago.
Great, thank you. And speaking of state-based plans, I'm going to package the next two questions into one. Nicole asks if Massachusetts is happening to be working on a state retirement plan, and if there's anything specific for business owners who may not have enough to put away for retirement. And similarly, Vermont has passed their state retirement program, but has had issues with implementation. Do you have any thoughts about how to support states as they pass legislation so that implementation can happen more efficiently? So first on Massachusetts, and then second on implementation in Vermont.
So if you want me to take this, then Patricia, if you'd like to. Massachusetts is interesting. Massachusetts actually was one of the first states to pass anything on retirement security. But it was a very narrow piece of legislation which focused on nonprofits that had fewer than 20 employees. And there is a savings program in Massachusetts. It's not as nearly as robust as the savings programs in Illinois, California, and Oregon, or what other states are planning. So it would have to be reformed or increased to allow the businesses to be part of the program and not just nonprofits. The second thing that Massachusetts does, which is like Vermont, they both are MEPs. That is, they both will be under like an ERISA type program. So they'll have employers being able to contribute, which, as you know, in the state plans so far, employers cannot contribute. So allowing the employers to contribute, I think is a plus because you can get more money, obviously, if you get the employers and the employees to contribute. But they're more difficult to set up because there are more rules and regulations regarding them. And they're volunteer. I think Vermont, from my understanding right now, you probably know better, Vermont has a voluntary program. I don't think it's a mandate. And as I said, Massachusetts doesn't include businesses, it's just nonprofits.
Thank you for this gift of time and knowledge, because it sets us up for states and places to move organizing actions forward. And so we will be following up with our members. So to be content, to be a part of our membership, Dominique, if you don't mind dropping in the chat. Oh, we don't have the chat. We'll follow up later because we had to close down the chat. But if you go to mainstreetalliance.org and join the members section, you will be able to sign up and be a part of continued conversations. As Kathleen mentioned earlier, there are going to be opportunities across the country that we can bring you all into some of these conversations locally. And Kathleen, would you remind us of the next one or two that's coming up?
Yes, sure. Well, we're going to have one this Friday in Hartford, Connecticut. It's going to be at 11 o'clock. It will be at the public library. The treasurer, Sean Wooden, is supporting that, and he's our big host. And we will also have Kilolo, who's this acting administrator of Social Security, as well as Congressman Larson, who has introduced a bill in Congress to preserve and strengthen Social Security. So we'd love if you'd like to come, we'd love you to come. There will be a few speakers, I just mentioned them, but there'll be lots of time for conversation with the audience. And so we'd love you to participate if you're interested. We also are planning one in Kansas, sort of August 10th, and we're planning one on Cape Cod, Massachusetts on August 23rd. There are others in the fall, but I think those are the two that are sort of closest in time.
Well, there are a few people on the call today from Massachusetts, and Cape Cod in August sounds lovely. I'd just like to go just to be in Cape Cod.
Okay, you're in.
So listen, if we want to build power, if we actually want to take action on this conversation can't exist just in this vacuum with us. So we want to call you all into action. Is that if you learned something interesting here and you're excited about moving things forward, we are asking you to host a roundtable in your community. Dominique is our distributive organizing. And what that means is that if you don't have an organizer in your region, please reach out to Dominique Saunders, who's our national organizing director. And if you're in Wisconsin, Vermont, and Minnesota, Sean, Mel, and Morgan's our point of contact. So thank you again for this gift of time. Thank you for our host, and thank you for your thoughtful questions. And we're going to keep building this and moving forward. So be back August 17th for the next Get in the